Okay, so welcome to our SSG Plus tutorial. Tonight's presenter is Susie Artsberger, and she is our Director of Information Technology at BetterInvesting. Susie has been with our organization since 2005, and in her role, she also serves as the product manager for BetterInvesting's online tools. She leads the team that is responsible for the development of all of these wonderful tools that we're going to be looking at, or we'll be looking at the SSG Plus tonight. So without further ado, Susie, I'm going to turn things over to you.
Well, thank you, Anne. I appreciate the introduction. I appreciate everyone who's taken the time out tonight to choose a live Better Investing webinar. And I especially appreciate our backroom staff of volunteers who make things like this possible to put on. So let's begin. Before we go any further, I'll get this quick disclaimer out of the way. We're not going to be recommending any stocks tonight, even though you will see different stock tickers. We may end up on different websites that provide research, but we're not necessarily endorsing those websites. And if by chance you have a problem entering the webinar or you need to leave early, this session is being recorded for future use. So you will be able to come back and pick up where you left off. Tonight's webinar is an overview of our SSG Plus tool, and specifically how to get a stock selection guide accomplished in that. It's going to tell you how to access the tool. We're going to tell you the key operations, and we're going to delve a little bit into member sentiment, our My Studies area, and some research areas. If you have questions, and we actually hope that you do, our backroom staff is able to handle those, please submit them through your chat or question panel for us, and we'll get to them. Some of them, if they're relevant, we may hold until the right point in the presentation, so be a little patient there. And if we get to a point where there are a lot of questions, I will make sure and answer it later if I don't get to it during the live webinar tonight. All right. That recording I talked about will be available on our YouTube channel. There's also a link from our website, but we'll put it up on our YouTube channel, which is where it's housed, within 2 to 4 days. So when you get that thank you for attending email, the link to the recording will be in there. If you, in the future, want to sign up for a webinar and you think you can't attend it, go ahead and sign up anyway. You'll get the follow-up link with all the information that you need to know. So that's a handy tip for next time. I mentioned earlier we're going to go through some of the key operations. So I want to point out that we have this little document that's called the SSG Plus Quick Start Guide. And it has 8 easy steps that show the basic SSG Plus functionality. By that I mean, what does it take to get a stock selection guide done in this tool and save it, print it, call it a day, if you will. So in your GoToWebinar panel, that is available as a handout tonight. So please check that out if you have a question. And it's also available on the Help and Information tab. So we will point that out at the appropriate point in the webinar. We're hearing a few people who have lost their audio, so if that is you, write in and our staff may give you a few suggestions here. The 8 steps of the SSG Plus Quick Start Guide are how to access the stock selection guide, the SSG Plus, how to open a new or saved study, how to do that visual analysis, how to review peer data. That is one of the key components that we have in these online tools. And then how to do the mechanics of forecasting sales and earnings, and how to do the mechanics of reviewing our PE history and forecasting prices, how to review our potential return, and then how to wrap it up by saving, sharing it, and so forth. So these are the basics of getting a stock selection guide done. And that's what's in that stock quick start guide. We'll be primarily using the main tool of our SSG Plus membership. That is this, but you'll also see that there are other tools that are involved in this tool set. The core SSG, which is a companion tool, has a similar purpose but a different viewpoint, and it's for a more basic investor. We also have integrated self-paced classes, a company research, stock comparison guide. All of this has integrated stock data. And for those of you who may have some of our older desktop tools, this type of Plus membership, which is our highest level membership, also includes a stock data service. Now, all of these online tools are just that, online and web-based. If you purchase them, or if you're in a club, as most of our members are, and you upgrade, it will appear as part of your membership, and you access them through the web. There is nothing that's going to be delivered to you. On the Plus side, there is nothing to install, and when we do updates, you'll see them immediately after they are launched. The differences between Core or Plus are there's a few different key areas. The first one is in the workflow. So Core SSG does things step by step, and there's about 14 steps to go through. So it's for the person who's not that comfortable with our stock selection guide methodology. The SSG Plus has a 2-page workflow to get through, and it goes much quicker. There are more graph items. There's more feature-rich items in terms of a ticker heat map, more portfolio reports, quarterly data, and so forth. There are also more screening options in that Plus membership. There's a corresponding price difference, but here you get a general sense of the major differences. So tonight we're strictly in this SSG Plus space, but remember, it doesn't matter which one you use, Core or Plus, it's the same methodology and gets the same results. I would also point out that, again, if you're using one of our older desktop tools like Stock Analyst or Toolkit, that they will also give much the same results. We've tried very hard to make Toolkit the same, and so rest assured that this is, the same inputs are going to produce the same results. Let's talk about how to access, because oftentimes we get people upgrading or purchasing these memberships and they don't know how to get started. So how do we get going on how do I access? Well, the easiest way that we found is to point people to this green box area on the website where it says Online Tools. And you can see that highlighted in this orange box. And I'm going to blow that up a little bit here. And we're going to start out in our webinar tonight by going to the My Studies area, but you could just as easily enter a ticker into the box here, like Apple, T. Rowe Price, or something like that, and click on Go. And you would be taken right into the tool. My Studies is going to take me to my saved studies, so you'll get a chance to see that. So these are the two areas where we're dealing with the stock selection guide. When we get into that My Studies screen, it's going to look something like this. So I'm going to orient you before we go live. It looks like this. We have an area where we can start an all-new study, put a ticker in a box, and click the New Study button. We have a top section regarding portfolios. So it's a collapsible panel where all of my portfolios are saved. So yes, I can aggregate my saved studies and group them into portfolios. So I have a group for like my personal investments, a group for my watch list, a portfolio for my club holdings, and so forth. We do have a number of reports and a fair bit of functionality here, so this is a whole separate webinar that's available on our website or on our YouTube channel about portfolio tools in Core and Plus. So we're not going to get so much into that, but we'll take a look at our saved studies. This is an area where all of my saved studies are. I can choose how many to show. I have quite a bit. I think I have over 400. And in this area, it's simple. You find what you want, and you simply click on the row to open. So that's a little bit of an orientation for the My Studies page. I'll point out here, I'll show it to you live as well, but when we are on a particular function of our tool set, the appropriate tab will be highlighted. So this is the My Studies tab. It looks like a little folder. Now, when we get into the tool proper, we'll still have those tabs, and this time we'll be in the SSG tool. And you can see by the logo, I am in the SSGPlus tool. So what happens is if I click through and start a study and I don't have access to SSGPlus, it will automatically put me in core SSG. It will put you in the highest level tool that you have access the first time around. So right here I'm in SSGPlus, and let's look at the elements of this screen. I have the graphical display of data where I can see the fundamental data for the company. I can see that same data represented in a table down here. There is a legend for me to click the various fundamental pieces of data on or off. There's a way to choose peers that I can look at. So I can choose them and I can look at them right here. And some top menu items. So we'll be getting into those live later on in our presentation. There's also a button to switch between Core and Plus. Remember, if you have SSG Plus, you can go back to Core, either because you want to review those concepts or because you want to show somebody else. Either way, we get a bunch of people who want to switch back and forth. So we now have a very prominent button to do that. And the other menu items are here. And then we have the basic navigation. So I mentioned that there was a two-page workflow. The first page is looking at history, basically, analyzing that growth, looking for the quality indicators. The second page that deals strictly with the stock selection guide is the valuation and return segment, where we're looking at historical PEs. We'll be projecting PE ratios, and they're also projecting high and low prices. Now, there is a third tab up here for quarterly data. We'll go into that a little bit here. It's not strictly necessary to get through the basics of a stock selection guide, but we'll certainly review it tonight. So I was looking at our questions right now, and there is one that is pretty timely. It says, if you switch back and forth between Core SSG and SSG Plus, do you have to re-input the data? No, you don't. I'll show you that live, but it will just change the view, if you will. All of these studies come from the same core database. So if you do a study in SSG Plus, you can subsequently open it in Core and vice versa. So that's a really cool feature there. You can just swap back and forth. So now that we've oriented ourselves to what we'll first be seeing, let's go live to the SSG Plus. But first, let me ask Ann, are there any more questions that have come by that we should be addressing before we move on?
No, not at this time. Why don't we just get to it? There's a couple, and I'm just going to say to the audience, if your question is out there and it's not getting answered, it's because I might be holding it for when we're going to talk about that in the webinar. So please be patient.
Okay. So I'm going to switch over to my browser, and the audience should be seeing that right about now. And here I am using the Chrome browser. You can use IE, you can use Firefox, you can use this on your tablet, and at the risk of sounding like a Dr. Seuss book, you can use it in your car, on your phone, and so forth. So browser-based, which means it can be run on a lot of different devices. Ann and I have used our tools on our phone. If you have a larger phone, it's a little bit easier. A tablet, it's totally doable, and it is totally workable on Android, iPhone, and she has a Windows phone, so it works there too. You might have to do some pinching and zooming. But here's that green box I was talking about. So I'm going to show you here that here's the My Studies button, and if I click on that, I'm going to end up here in my studies, My Studies page. We can see that the green icon is highlighted telling me I am in the My Studies area. So hopefully you guys can see that. You will see that I have 25 studies showing at a time, and I am looking at everything, all studies. If I scroll down to the bottom, so let me do that, and you can see I have 457 saved studies. So I'm kind of reaching the maximum that I want to manage, but I obviously do a lot of these different research and studies, so they have just tended to accumulate here. That is one area that I hope that we'll be able to provide some input on helping people clean out old studies as well. Okay, so our study screen here has some basics. I mentioned we can pick any one of these and just start a study, but I am going to start an all-new study. Later on in the presentation, we're going to come back and investigate our options here a little bit more, but let's go right into our tool. So tonight we're going to do a study on raw stores. Now I can start typing the name of the company and see it come up. I know, then I see the ticker is ROST. So I can also just type the ticker and either hit my enter key or hit the new study button. And that will start a new study. You'll also see that I had a couple of old studies. And when I was typing in my ROS, it said, it pretty much prompts you to say, oh, maybe you want one of the older ones. But tonight, no, we want a new raw store study. Now, why did I pick this? I picked it because it really works well with our methodology. I do want to point out that the stock selection guide methodology is best for growth companies. So if you have a company that is not growing or has negative growth, and I'll point to companies like GE when I talk about that, doing a stock selection guide is going to be harder. So Ross shows us some very nice lines that we can immediately see are heading up and to the right, telling me that there's growth, there's increasing sales, and increasing earnings. This is the page that we've talked about before, and we can see that we're now, the tab says we're now in the SSG tool. I will point out some things that are interactive that we didn't get to do in the PowerPoint, and that is, let's talk about this line up here, which is the header. And if I mouse over that, this is new with our September release, I'll see pretty much the date of the last closing price, so that was yesterday, when that fiscal year ended, so raw stores are going to end another fiscal year here in January, the industry and sector that it's in, and a short description of the company. Sometimes we open companies and we're not quite sure what they do, so this is a very quick lesson about raw stores. We'll see our graphical area here, our tabular area of data at the bottom, and then a couple, here's that legend area that I talked about, and I can turn on more data. I can bring up book value. I can turn on free cash flow per share. There's 11 items here. So it might be getting a little messy. I can turn things off just by clicking on the legend item. I can turn off any one of these default ones too. So the sales, pre-tax profit, earnings, and so forth come up as defaults. I can turn those off and turn any of the other ones on. We'll see if this company pays a dividend. It sure does. If it has long-term debt, net income, of course it should, and shares outstanding. And let me turn some of these others off. We're going to be noting that shares outstanding have been following a steady decline over 10 years. So this is obviously a strategy of the company. So what we're looking for in our methodology is pretty much up, straight, and parallel. Now, having said that, this is not a class on methodology. This is a tutorial on getting through and doing a stock selection guide within this tool. So you can use this tool. You can use the core SSG. There's a separate tutorial for that. So the subtleties of the methodology, meaning how we pick, how we use a stock selection guide to its best advantage to pick quality growth companies at reasonable prices, is a little bit more in depth, especially when we get to forecasting. I'll point you to some resources at the end of the program for where you can learn more about the methodology itself, and especially how to make forecasts. Some of the things that we look for, we look at different pieces of data within our methodology. We'll look at not only the annual data that's represented here, but the quarterly data. So we see some solid circles and we see some open circles. Now the open circles are the most recent quarters. And then over here we have quarterly figures from the last quarter end compared to that same quarter a year ago. So this data is from October 2015, which was it's from their October, the quarter that ended in October. And compared to a year ago, they had a 7% rise in sales over the year ago quarter. And their earnings grew significantly more at 15%. We'll see that again when it comes to projecting. We also see what the Morningstar data feed tells us about analyst consensus estimates. And these are an average of Wall Street estimates that Morningstar has gathered. Are they all Morningstar people? No, they're not. They are the ones that Morningstar has gathered and provided to us as part of the data feed. One of those might be the Morningstar analyst, but these are generally a consensus or average. So we see that for sales, short-term sales, 2 years, 7.5% estimated growth rate, and long-term estimate of earnings, 12.6%. Long-term in the case of analyst estimates doesn't necessarily mean 5 years, although we show it as that. It usually means 3 to 5 years. So having said that, I am pointing at a line on the chart here that is light blue, and it says EPS analyst estimates of 12.6% growth. That is what that light solid line is in the background. So let's recap. We have our historical data, we have our quarterly data, we have our analyst data showing here, and then we have a dotted line that represents our projection. Now we're not quite doing projections yet, but when we do that, we can either drag this line or we can enter a number to put our projections in. So you'll see all those pieces come together on this graph. When we do make projections, let's talk about one of the pieces on our front page here. We will be able to pick from where we're projecting the last annual fiscal year, the last quarter, or from the end of the trend line. So that's a live orientation of our screen here and the data that we're looking at. As I scroll down, we'll see some of the other components of the screen. So I mentioned that there was a tabular display of data, and that's what we see here. We're going to see the historical sales, all 10 years of it, the growth rate that is represented by those 10 years of sales, and that is from the line that goes through all of that data. It is not a calculation from start to end. It's actually a linear or a line from the least squares algorithm. So it estimates growth rate over time and does a decent job even if you have some bumpy data. In terms of earnings, we have a little bit of bumpiness here, not too much, but that line represents about 25% earnings per share growth rate over the last 10 years. And our pre-tax profit line here, the pink one, is about a 20% growth rate. So that's the same tabular display of data. Now about this time, I sometimes get asked on companies that just don't look as good as this, can we remove data? Or can we change data? Yes, one of the most common things that I do is removing data from the chart for one of two reasons. Either the company has a blip in the data where there's some one-time event that I don't want to consider, or I just want to remove older data. And to do that, which is what we call taking outliers, I click on the year in the graph. And we can see the corresponding data being struck out. And then we can also see that the growth rate over here in our growth rate column has been recalculated. So let me take one more piece of data out, and we can start seeing those earnings per share growth rate, for example, coming back up and becoming a little bit less. So over these 5 years of data points, we see a growth rate of about 9%, earnings per share growth rate of about 17. To put them back on, I can simply reverse that action. One of the other things that I can do is I can selectively remove data. Let's say I want to remove pre-tax profit from in the middle here and strike it out. I can do that right in my grid here in the table. So that's a possibility. You may note that there are some green boxes here. We'll get to those in a minute. This is where we're going to enter our forecast. Every place that you see a green box is where you're going to enter data and forecast. So that's a hint here. But before we go on and spend the time forecasting, we also want to look at one more thing. So our methodology suggests that we want to look at companies that not only have good historical and steady data indicating that there's some active management, active good management behind it, but we want to look at some profitability measures and some return measures to also give us some comfort that the management of the company is doing their job, basically. So what we like to see is pre-tax profit on sales over time to be steady or growing. And in this case, we particularly look at the last 5 years, and we see a nice pattern of steady, if not growing, numbers. And that is represented in a graphical way over here. It's green, and I mouse over it, and I see that the trend is up. If you are doing a stock selection guide in SSG Plus and you don't see those little graphs, let's go to Tools and Preferences and switch your trend display to graph. It might say, if I switch it to text, it might say just the words, up, down, and so forth. So I'm going to switch it back to the graph by going to Tools and Preferences and switching my trend display to graph. And then I will see my little graph again. Now, some of the other quality measures that we're looking for are percent earned on equity, also called return on equity or ROE. In this case, we're also looking for at least steady or growing numbers. And in this case, we have a 46 in the middle here, and it's kind of abated or slowed down since then. We're still averaging 43%. Now, honestly, we're looking for something greater than 15. And so 43 is pretty great. And here we can also use outliers. If I take the 46 as an outlier, all of a sudden I see my average come down a little bit, and we see our recent numbers completely in line with the average. My red graph turns to yellow, and the trend is even. I am satisfied with this. And finally, we'll take a look at how much debt the company has as a percentage of capital. Again, we're looking at for indications that the company can manage its debt, so we're looking for not too much. So we don't want that number to be too high. We'll have to take a look at how others in the industries deal with debt, though, too. So that'll lead us right into peer data. But I'm also looking for steady, if not decreasing debt. And here we see that debt was decreasing, but recently has popped back up. So while these numbers don't alarm me too much, if I were to do an in-depth study of this company, I'd want to take a look at, why they took on debt in this particular year. And our graph will adjust as, if I take out that last year, we see that over time this company has had decreasing debt. So I can just put that back on there. So I talked about measuring some of these things against their peers. So we have a pre-tax profit average of 12, 13 most recently. We have return on equity in the 40s. We have debt to capital, in the high single digits, low teens. One of the really helpful things here is looking at peer data, and this is a pretty powerful part of both SSG Plus and Core SSG. We get to it by this button right here called View Peer Data. And when I open that, I see all of my peer data for the 3 peers that are automatically selected. And when I say all of my peer data, I have a number of tabs from which to choose. And I can simply go through and see how these companies stack up on all these different data items. But one of the first things you might want to take a look at is, what are you happy with your peers? So they are automatically chosen the first time that you open your company, and the way that they're chosen is they're in the same industry, and in this case apparel stores, not apparel manufacturing, that's a different industry. This is apparel stores, and they're of a similar size, so they're all fairly large companies, and they are ordered, because there's usually more than 3 in that kind of group, they're ordered by the best earnings per share growth rates. That is an algorithm, and algorithms are not always perfect, so you can change. So then the way that we're going to change is I simply am going to erase what I have here for the gap. I'm going to put my cursor on there, and I can backspace, or I can highlight the whole thing, and I'm just going to put another ticker in here. Now there are some other apparel stores that I know about. Lululemon comes to mind, and I can either start typing the name, or I can type the ticker and put that in there. And then what I want to do at this point is update study. And then we'll see these 3 up there. In your legend, here is where you look at the peer data and turn it on and off. So we see Ross Stores as my company under study. LB is L Brands, or limited brands, you might know them as. TJX, TJ Maxx, and their whole set of companies is here. And we can see that visually how that historical sales has gone. We can also see in the table the different growth rates. So while Ross Stores looks pretty good against these companies, Lululemon over that time period has had a 40% growth rate. Now it's a much smaller company. It's about 1/10 the size, so some of that we expect. So we can turn Lululemon off. We can turn any of these off, and we can go through and see all of the rest of our peer data. Earnings per share data, pre-tax profit data, pre-tax profit on sales. So remember I said this is one of the quality factors. Ross Stores had a 15%-ish number. How does that stack up to its peers? So let's put some of these on here, or we can simply look here and see that aside from Lululemon, it does pretty well in terms of pre-tax profit margin. So I'm going to bring up Lululemon, and we'll see a pretty interesting thing is Lululemon used to do much, much better, and it's come back to earth. If you're an owner of Lululemon stock, you may already know this because the stock price has come down correspondingly as well. But we see Lululemon's last quarter is 13.6. So our Ross Stores is holding up okay in comparison to the peers. Let's look at return on equity. And here we have Ross Stores in the 40s. L Brands has had issues. TJ Maxx has a pretty good return on equity, a little bit better than Ross Stores, and Lululemon is not so good. So it's in this type of comparison that can really add to your study and augment the methodology. And you can do the same thing for debt to capital as well. So we see limited brands has a lot more debt to capital. Let's turn on TJ Maxx. Ross Stores has less than TJ Maxx, but Lululemon has nothing. So please, please make use of this peer data here as a way of determining if your company is the best company in the industry and is worthy of further study. So I think that I'm going to continue with Ross Stores. I think it's shown pretty well so far, and now I'm going to turn my efforts to forecasting. But before I do that, Ann, any questions?
No, not at this time. We're doing
Okay.
great. The back room is answering a lot of questions that are coming in, and nothing. I still have a couple that I'm holding
All right.
when we get there. Okay.
Let's move on. So when we forecast, I mentioned that we are going to want to enter numbers in any of the areas that have green boxes. So let's start. Our methodology says we're going to enter our sales forecast first because that's the core. So I'm going to click on that green box and it will bring up a panel. Now, here's where if you're not familiar with an SSG, you're probably going to want to get some extra training in what the methodology is about. I'll go into that later. We have a couple of options here. We have our historical numbers of about 9%. To help us, we have what do peers typically grow at, and we've seen lesser numbers. We've seen huge numbers on a smaller company like Lululemon. We have an analyst estimate available to us. We have a couple more pieces in our quiver that we can pull on, and one of them I'm going to show you right now is under research and better investing and member sentiment. So member sentiment is an aggregation of studies created in the last 90 days, and anonymously you get to see what other people have forecasted, so we can get a great sense of where those forecasts are coming in. Now, should you take any one of these? No. We do have a way. They should just be a reference. I'll also say that there's a way to average them in SSGPlus. This is not available in Core, only in Plus, but if I click on this number and select them all, and I go down to the bottom, I can see what those averages are from all of this. I'll warn you that if there's so few studies, like 3, 5, less than 20, for example, statistically, it's going to be a little shaky. And even though I have 45 estimates here and can get a decent average, I'll also say that this is for reference only. So you're going to take a bunch of these inputs, you're going to do some research when you go to forecast, and we have a whole class on how to do more research. You can look at a bunch of various websites here to see where the company's growth prospects and come from and so forth. You're going to kind of take all of those points and go from, any possibility from 0 to infinity to something that's more narrow and put your forecast in. This may seem daunting, but after you've done it for a few times, you'll get in a rhythm, you'll get used to the process. For the sake of argument here, yes, Ann?
Susie, we have a quick question about member sentiment. It comes up frequently. So I thought we could address it. If a member does more than a single study on the same ticker, does that increase the member sentiment count?
Yes, it does. Every study that is completed with all forecasts or judgments completed becomes a row in the member sentiment table, no matter who does it.
Great. Thank you.
So, one of the, that's a great question. It also brings up, you might think that you could game the system, but I'll tell you that there's some checks and balances built in here in terms of statistics help, and the number of different people doing studies help us out here. I'll also point to the fact that when you have an analyst number here, it's really built off very few Wall Street analysts. So we have 16,000 people in our community that have access to these tools and are doing studies, and they're like-minded investors, and that's pretty powerful in adding to that member sentiment number. So, I don't want to say, we should just always go ahead and use this. Tonight I am going to use it because we need to get through the rest of our study and show you the other cool parts of the tools. So once I have entered a number in this green box and clicked Update, as you saw me do, I will get my dotted line move up and show me what that looks like visually. If somehow you've entered a number that doesn't seem consistent visually, go back and check again. Now I'm going to work on to earnings, because sales are the growth driver. Earnings come from sales ultimately, and so we'll do that and click on this green box here, and we get a much larger panel. You have more options in SSG Plus for forecasting earnings. You could just enter a number up top here, and I will put the member sentiment number of about 10 as one of our options. We could pick the analyst estimate number of 12.6. We could use a tool called the preferred procedure to help calculate earnings. And this is a cool little tool that's like an income statement or a business model. And it says, okay, you have forecasted a certain amount. Let's back out our pre-tax profit, our expenses in the form of our pre-tax expenses. Let's back out taxes. Let's divide it by the number of shares outstanding and calculate what that number would be 5 years in the future. So that's a really quick run through. So let's start at the top again. Here's my 7.7% growth rate that I entered in the previous one. On the right here, you might be wondering what's happening here. This is just a restatement of the historical data, the annual data, and then the recent quarterly data. It's not particularly useful right here in sales, but when we look at pre-tax profit margins, we might be more interested. So the average, last 5-year average of pre-tax profit margins was 12.6, but I can scan my eye here and see that every single year for the past 10 years, that has increased. And in fact, the last quarters are also higher. We're getting to that point where they're in the best practice realm of others in their industry. Remember, we saw TJ Maxx coming in with numbers about like this. I could choose to bump this up. Now, when I do that and I move on, I'll see my 6.1 grows to 6.7%. If the company increases their margins, at the end of the day, they're going to make more money. Now, if I'm losing you already, we have an hour-long class that's in our store called Estimating EPS Using Preferred Procedure. So Ann will be teaching that on February 11th. And if this concept intrigues you, I would advise you to take that class. Another part of the calculation are taxes, and we can see over time how much taxes the company has paid as a percentage. We can see the shares outstanding. Now remember, I said for 10 years this company has had a policy of reducing shares outstanding. Now our default is the most recent shares outstanding. We may want to reduce that, for example, at which point we'll see our potential growth rate going up again. So those are a few quick and dirty ways to use preferred procedure. But before I leave this page, I'd like to tell you about the last two collapsible panels that we have. One is titled Sales Growth Trend, and what it tells us is over a decreasing number of years, has their sales growth rate moderated or increased. So we see over all of the data points that the growth rate was 9.4%. The one or two more recent growth rates, or one or two more recent data points or periods, it's actually a little bit less than that. And we also have the quarterly year-over-year number that we saw on the front page of 7.1%. So this is another way of validating the number that you're putting here. Similarly, with EPS growth trend, we see that the growth has come down more recently and then has kind of stabilized in the 14 to 15. Now this is only a few data points, but so the notable thing here is it's come down. You're going to look at the trends over time and use that as another reference point. One thing I do want to point out, just as an aside here in a company like this, is that this company seems to outpace its sales with its earnings growth rate. So we've seen that historically. We see that in the analyst projections, and you may want to take that into account as you're making your projections. Or you may want to consider if they can continue to do that. Two ways of viewing that question. So don't forget these last two, sales and earnings growth trends, as you complete your study. Now I'm going to go back to our member sentiment number just for the sake of completion. Click on Update Study. That's generally what we do. We click on the green box, we enter a number, we go through what's on the panel, and we click on Update Study. And with that, we're done with the front side, or the first page of our stock selection guide. We would then turn to the pieces of the stock selection guide that deal with how do we value the company. So right now we know we're satisfied enough that it's a quality growth company. We've made our sales and earnings calculations within our tool. Now, how do we enter our valuation projections using this tool here? Well, at the top part of our screen here, we look at our PE, or price earnings history. So this is a table that has, as you can see, multiple columns and 5 years or 5 rows of data. And then we have a row that provides an average and another row that provides what the current numbers for that particular piece of data are. So we see the high and low for every year for the past 5 years. The average low, which is 22, that gets used later on. I'll point that out. That's the only reason we do that. The earnings per share over the last 5 years, and then what the current trailing 12-month earnings per share are here. Generally, I'd like to see these numbers keep going up. And then PE ratios, high PE ratios and low PE ratios. Sometimes I get asked, what does A/C mean? Well, this is just a help to tell you how we calculate it. So to get the high PE ratio for the year, we're going to take the high price divided by the earnings per share. It's as simple as that. And this will provide, the maximum high and low that this stock has achieved in that fiscal year. So you might want to say, well, why are we only at 2014? Is the data old? It is not old. This particular company has a fiscal year that ends in January. So the last fiscal year ended January 2015, and the majority of their commerce and commercial activity actually happened in 2014. So the data seems stale, but just consider it a number. If we go back up to the headline here, we'll see that the last number was in January, and if we go on the first page, the last quarter was October 2015. We're going to expect a quarter to close here pretty quickly. So continuing on with our PE panel, we can see a column of high PEs over the last 5 years, the average of all of those, a column of low PEs and the subsequent average, the dividends that have been paid, as well as if the company has increased their dividend. I can see that because they're now paying 47 cents a share if I purchase now, compared to the last fiscal year where the high was 40, or they paid out 40 cents throughout the whole year. The payout ratio, if the company pays the dividend, we'll see it here, and what percentage of their earnings are paid out as dividends. So in this case, their dividend policy seems to be increasing their payout. So while the average was 16, the last year was 18, and this 47 cents divided by their last trailing 12 months, tells me that it's continuing to inch up. They're now paying about 19% of their earnings out as dividends, and the corresponding high yield. So what we're going to do with this data is use it in the price calculations here as we pick a high and low price. So the standard way the methodology picks the high price is we simply take the average high PE times the high earnings per share. Now, one thing that you can do in this area up at the top is you can still take outliers. So I would look down here, and I'm noting that the more recent trends are getting to be higher PEs, and the older number is kind of not matching the others. I can see that in a chart if I go to the price earnings chart. So I'm going to click on this button, and I can see 10 years of PEs, the high PEs, the low PEs. This is that 5-year average at 19.3 and 12.7. I can see that there was a dip, and maybe my average should be just a little bit higher. You can, just use this as confirmation. The other thing that you can do is you can go back to your peer data. So this button here brings up that peer panel again, but tosses you right over to the PE numbers. And what we can see here, let me just take Lululemon out of the mix for a minute and leave it as Ross Stores, Limited Brands, and TJX, is that there's a general trend in these companies. There's some outlier going with brands, but there's a general trend that all of the companies seem to be following, which means my company's not so strange. That's what that tells me. I don't have to be so concerned because it seems to be an industry-wide thing. Let's look at Lululemon. Lululemon started out huge and now is kind of coming back to earth, 43, 40, and so forth. So I just use this as a, hey, are other companies in the industry doing the same thing? I also take a look and see how my company stacks up on a PE scale with others. And to me, it's just really in line. You know, 22s most recently, 19, high 19s on average, and so forth. So what I'm going to do, and this is where the subtleties of the methodology come in, I am just going to take these last years as outlier, and we'll see that 19.3 comes up to 20.4, and the 9.7, taking that out, which brings our low average up to 13.5. So I'm going to put a little bit of time in there. Now I'm going to go to that green box and forecast my high price. At this point, it's pretty simple for me. I'm going to take the 5-year average high PE. So I can manually type it in there, or I can actually do something that's a little bit similar, a little bit easier, I mean, and double click on the 20.4. That works really well when you're on a desktop or laptop computer. Double clicking does not work so well when you're on a tablet or a phone, so you would still probably need to type that in. Now when I do that, here's my calculation, that high PE times the high earnings per share forecast. Where did this come from? It just came in there. No, it didn't. $3.95 is what we forecast when we put in our forecast on the front side of the stock selection guide. That 10% growth rate works out to be $3.95 in the future. That's where that comes from. Therefore, I'm saying this company may get up to $80.60. It's currently at $52.59. Now I want you to take a look at this. There's some other reference points. You've got your peer reference points, you have your historical data reference points. Let's take a look at this current PE that's already above what I have said my high PE is. At this point, it's up to you. This is where your comfort level comes in. You can go a little bit higher or not. As soon as I put that newer number in, we went from $80 to $83. Now to lock that in my study, I would click on Update Study. And there's my $83. Another green box is sitting right here. This is where I'm going to calculate or forecast my low price. And I'm going to click on that green box there. Brings up another forecast panel. I hope you're seeing a theme here. And once again, we have an option. I can just enter a low price that I think this company might go down to at any point in the next 5 years. If you have a magician in your family, maybe they help with this number, maybe you just have another way of looking at price charts, you can enter a number directly here. The most common way that I use and most of our members use is the very similar calculation to the one that we used before, which is taking our low PE times the low earnings forecast. And once again, I've got some reference points here. I can just double click on those again. I'm going to take 13.5, or I can write in whatever number. The low earnings per share forecast default that comes in here is the last fiscal year earnings. But remember, they're doing better. They've got 3 quarters in. So we're going to click on 245 and put that trailing 12-month number in here. And it's going to calculate out and say, maybe it's going to go down to 33 again. And we have some other reference points. We can look at the average low price of the past 5 years has been down to 22. The 52-week low never went that far. It's at 43. The 2014 fiscal year low went down to 30, so it's a little bit below that. This last calculation, price that the dividend will support, says people might buy this at its high yield of 1.4%, which will work out to be 33. This is a lot more useful if the company is a higher dividend payer. So again, we're usually sticking up here. If this strikes you as too low, I would suggest that you have 2 options. You can up your low PE, And watch as I enter this number, it's going to up my low price. Or you can go back here and say, you know what, I don't want to do this mucking back and forth. I'm just going to say this might go down to 38, this might go down to 40, something like that. So those are your low price entry options here. So once I have that, I'm going to update my study. And at this point, my study is essentially complete. There is one more judgment point that we will make, and that is how much dividends are going to add to our return. But before we get there, at this point, we have our high and low price established. We understand that based on our calculation of zoning, let me scroll down a little. This is a button. You can click to see a high and low price, your high and low prices and where the current price is. That we're kind of stuck here, not stuck, but we're in the hold zone. This might be, according to our calculation, the buy zone, it might be worth buying at 46. We're currently at 52. So that's what we know so far. We know the closing price is here. We know that there's 1.7 times more room to grow than there is room to fall. Typically, we like to see that around 3. And our potential price appreciation over that 5 years is about 57%, or yeah, 57%. That's probably a little lower than we ideally like it to see, which is why it's in the hold zone. If the stock price should drop, this could be a ton better investment. But at the current price, we might see a potential appreciation per year of 10%. Now I mentioned there's one more judgment point, and that is the payout judgment point. So if I click here, I can enter a payout value, and what I will suggest is the default is 16%. That usually works. Usually you don't have to touch this. If your company has just started paying out a dividend, you may want to. In this case, I'm a little bit interested that the company's dividend policy says that they're paying out a little bit more. I'm just going to change 16 to 18, but it's usually going to be very minor. So watch. We're going to go from 10.3%, and that little bit of dividend bump is going to give it 10.4%. It's really going to be trivial to the balance of your calculation. And that's what this is telling me I might see, based if all of these projections come true, that I might be making 10.4% on my investment. So it's not a guarantee. This is just a structured methodology to help you evaluate your investments. And there you have it. You have done your stock selection guide. So Anne, before we get into how to save and print, are there any questions at this point?
No, you are doing a great job, but maybe at this point, I know you kind of have it ahead in the agenda, but there was an earlier question about how to enter new data. Say somebody sees a press release, etc., and they're really anxious to get it on there. Is there a way for them to do that?
Yeah, let's kind of go to our top menu options here. So first of all, let's note that this is kind of giving me a big yellow box that says, I have not saved my study. I'll tell you that people who use these tools often will just open up the company and look at the historical data and decide to reject it, or they will go partially down the road of forecasting and say, you know, this is not looking good. About 80% of studies are abandoned. They're just not worth taking to completion. So out of the gate, we don't save it. We're going to ask you to save your study to our cloud database if you want to come back and open it later. I would like to do that with that study. So I'm going to click here, and it is going to ask me what I want to name it. By default, it's the ticker and the date. And I'm just going to put in that this was part of a webinar. I could erase all of that and put in my own 20 characters. So when we get up to some of our options up top, there is an option to save it. That's exactly what I did. This is just another way of getting at that. There's an option to create another copy. And if I did that, it would say, hey, give me the new name. There is an option to export this. Now, an SSG data file can be imported into a lot of different of our older products. I would suggest, though, that if you are going to export and send it to somebody who has a toolkit program, that you use this ITK format. So these are both exports, just different formats. But actually, one of the hot tickets here is to do share study. So what that is, let's say you want to send the results of your research to somebody else. Click on go to File and Share Study. And you have a number of options here. And if that other person, this is the even better hot ticket, if that other person also has Core or Plus, doesn't matter. If you have Plus and they don't, they only have Core, it's fine. They use the same structure in the background. That other person will be able to open it just fine. I would click on Give them a copy of an online study. I can also include the actual data files. I can include a PDF of that. I can include the quarterly trend data report. We won't be getting into that so much tonight, but any one of these options I can share via email. Now, as I'm sharing it via email, it's going to, sure, send me a copy of the message just to make sure it went out. Now, how do I put in who I want to send it to? I'm going to click on Select Recipients. And oh boy, now you can see every place you can email me, but let's email Ann. I can have a saved list. And if I am in a club, a Better Investing registered club, so we know who you are, it will bring up your club members and you can add them to your list. So I would add them to my list. So I can pick anyone out of my saved list, and that will come up here. I can add a personal message. And share that study. And what will happen on the other end is that person will get an email with the data files attached or the report attached or an invitation to accept that study into their own online account. And then it's simple. There's no exporting or importing. It all happens in the background. So please, please make that available and check this out with your club. There's a question here about, correct me if I'm wrong, it just disappeared. Oh, exporting ITK files, is that available in Core? Yes, it is. So all of these options here are the same between Core and Plus. Now getting on to data. This next tab here says, here's where we can look at all the data that goes into the study. So in company basic data, we have things like sector, industry, website, price, date, and so forth. You can change any of those things and then click Update Study and they will change. Annual data, very similar. Here is all of the data. If I wanted to change the high or low price, I can. If I want to change earnings, sometimes people do that. You can change it here and click Update Study. If I want to add another year of data in advance, I would fill out all of these columns. Just start typing. You don't have to put the year in, just start typing, and so forth. With what you believe that company will do in the next year, and that's up to you. You're going to have to figure that one out either from company guidance or something else. And let's put long-term debt and total debt. And then click on Update Study, and that data will be automatically filled in. We see this changed to 2015. So this is where you go to change and add data. Quarterly data, same way. You can change or add data here. Refreshing. Let's say you're in the middle of the study and you realize you haven't, it's old. Either the price date's old or you don't have the most recent quarter. You want to go to Refresh Study Data here, and you can update the stock price only, You can update both the company and stock closing price, or you can create a whole new copy as you're doing this, depending on how you want to work that. So one thing about updating and overwriting is that it will put a whole new set in. And we'll see after I do that that my 2015 data went away. So at this point there is no lock and save of that manually updated data. That's important to bring out. But you can continue to add more years if that's how you want to work it. And refresh study data is where you go to update. And does that answer that question?
Well, I hope it does. That seemed very clear to me.
Okay.
Hey, can we go back just a minute? We had a couple questions on the sharing options, and people are asking if it's okay, can we share our SSGs with a non-member, maybe by choosing that PDF option?
You absolutely can.
Yeah.
You can share that completed study with your club member and so forth. To get it, they don't have to be a member. There are advantages in someone else having the tools, because this is the easiest way here to do it online.
Right. And for that to work, the copy, you do have to be a member and a subscriber to the tools to receive that. Yep. I think there was a question regarding that as well. But you can receive it in these other ways, and you don't even have to be a member.
That's correct. That's absolutely correct. So yes, it reminds you here that the recipient must have access to Core SSG or SSG Plus to receive the study through this function. It will also remind you of that in the email.
You know, one thing, I'll just share a tip, like if you're going with sending out something to your club members, you can just check all the boxes. You don't have to just pick one. And that way, if you've got a variety of people, some using Toolkit, maybe some don't have a tool at all, some using the online, they're all covered.
A great tip. Okay. Yeah, continue to keep those questions coming. We haven't really talked about print so much, but this is a way of producing that stock selection guide on basically the form. It takes a few seconds to get this done as it creates the images in that PDF and so forth. So let's do that and open it up. And you can see that I'm bringing up a PDF of basically the traditional two-page stock selection guide form. That's what print does for you. Print does a few other things. Let's bring that pop-up panel. There's an append notes function, and there's a quarterly growth trend data function. So what are notes? I'm going to go right over here to tools, and in our research class we talk about notes pretty extensively. Notes are a function where if you want to make a note during your study, you can create a new note, write something relevant about analyst growth rates, for example, or company guidance. Because I can guarantee you, you'll think you'll remember why you made that judgment, but you don't. So this is a great way of documenting why you made judgment points. And then when you go to print, you can choose to append the notes. It comes out in a third page. So that's pretty great. I can't leave this tool without talking about research, though. We do a whole class on it. And what we have here are very specialized research links that directly with the company under study. So I will bring up member sentiment for Ross Stores. If there's any BI Magazine articles, they will come up. If I want to go directly to the company's website for Ross Stores, we know what that is. It comes up here. Now, because Ross is kind of a consumer company, it looks very salesy. That's not the case for all of these. I'll tell you my tip here is to go to the bottom or look for something about investors, either at the top or the bottom, and then you'll get to the investor relations site. So that is a hot ticket for getting directly to the company's site where there's lots of very good information. Here are a number of different websites that have analyst estimates in them. company summaries. One of my favorites, as Ann knows, is the filings and transcripts. Seeking Alpha does a great job of providing a transcript of the latest conference call, so you can go there. Your SEC Edgar filings, which are the official SEC filings, are merely a click away, so you don't have to do a lot of rooting around. You can go directly to the SEC filings. 10K is annual. If I click right on there, I will see all of the 10K filings right there. So I've already pre-filtered it for me, and I can just go right to the latest one. You don't have to root around and try and find what you need on the SEC website. A couple of different ways of presenting financial statements on different sites, key statistics, and price charts for your company under study. So as you're going through and building out your research for this company, take a look at all of these. They are all free sites too, so you don't have to pay any extra for those. We talked about tools a little bit in terms of notes. Share Study is the same function that's over here, so don't think that it's something different. We thought it worked better under Tools, but now we're finding it works better under File. That's all. Quick navigation. Ann loves this. I don't use it nearly as much as she does, but let's talk about what quick navigation is.
I do. There's been questions, and I had them marked. We weren't going without getting here.
All right, let me answer a couple of, well, a question here about research. Is there a Morningstar analyst report available through research? No, there is not, because that's a paid feature of Morningstar's site. So we do have the other Morningstar pages, but not their special analyst report. Okay, quick navigation. We made it easier to see. So it's on every page here. Right where we're here, quick navigation. If I click on it, it brings up another panel. We love these panels. I can quickly create a new study. I can create another one on Apple and just say new study. And the best part is, let's say I want to look at old studies or saved studies. I can just type in the ticker and see them there. So do I have Apple Studies? I bet I do. I'm going to type in that ticker, Apple, and we'll see all of my old Apple studies. So I don't necessarily have to go over to this My Studies section. I can do a lot of what I wanted to do here through the Quick Nav. So let's say I wanted to open, there's also a slider, and these studies are sorted by your latest to oldest, so you can also use it that way. And what else do you want to tell people about QuickNav?
I don't know. The filtering is just the best thing. I have all of my also 400 or 500 studies at my fingertips, and I can just quickly search them. So, here's another hint, Susie, that we use. Our club name is called Cash 22 that we're in.
Yes.
And if you name your studies that are unique to your club with some kind of appendage like your name, Cash 22, and you search for that, then you're going to see all your Cash 20, your club studies right there in that list. So that's another little filtering tip. But
good.
We're almost out of time, so we
Well, we pretty much, so we talked about quick navigation. I showed you preferences. There are not a ton of preferences. There's how you want to display your trend, where you want to default your projection start point. Zoning is a function of, when you have your low price and high price and you make buy, hold, and sell zones, do you want them to be 25, 50, 25, or evenly spaced 33, 33, 33? And this is the name that goes on your report. So we've pretty much exhausted the options up here. I do get occasionally questions on close that people expected to do something. I'll tell you, this is terribly browser dependent and browser version dependent. So some browsers let us close the browser tab nicely with this, some don't. And in the end, you may see this going away because it's just too hard to control. I mentioned, go ahead.
There's just a real quick question on the Quick Nav or anything. If you haven't saved your SSG, are you prompted to save it before you navigate away from it?
Yes, you are. So we can, let me open a new study, and then if
We
I
try to
try
help
and
you
go
out
to
there.
the screener, it says, hey, you haven't saved it.
Right.
So, and then
Okay.
if I want to go back to my old study, here is that Rust. Um, so there's plenty of prompting. One of the questions early on was about going back and forth to core SSG. So let's show that switch. All I have to do is click to switch, and we'll see this same raw stores study in core. Core has more tabs, more steps, because it's step by step. It also shows you, what you're supposed to be checking for with each fundamental data item. So that's the beauty of it. It still has peers. So if you need a reminder of what to do, feel free to switch back and forth. And it's as simple as that. Exact same data shown two different ways. So we've kind of exhausted through there, and we're reaching the end of time here. So I appreciate everyone's sticking with us. And any more last questions?
Before we go, well, we have had some regarding, how to deal with portfolios, some about screening, like where's that heat map, and I'm not asking you to answer those right now, although you were getting ready to go there, but I thought maybe we could give them a hint on where they can find more help and assistance.
They sure can. So let's talk about that a little bit. Here's the Help tab. And I also have a screen in my PowerPoint. So if you want more links to the quick start guides and so forth, we're going to go right here to this Help tab, and it's now highlighted in green. These are links to our other tutorials. So they will always be the latest version. If you were to click on this right now, we would see the last April tutorial come up, but it will be replaced in a couple of days. So if you want to know more about core SSG, it's here. If you want to know about stock comparison guide, easy research is where we go into using all of those research links and notes. What's new in tools is where we introduce what's coming up and what we're working on. Portfolio reports in SSGPlus. And I think we're actually missing one here as far as screening and stock ideas, which is a newer webinar for us.
I think we are. How did that happen? We do have another one there.
Your quick start guides are right here, and they are much like, simple pages, simple steps to get through the process. We have that comparison chart of the differences and so forth. If you are wanting to know more about the methodology, here's a link to some classes. There's also a link to frequently asked questions and a place to submit user feedback. So with that, I would like to go back to our PowerPoint and wrap up. A little teaser on what's next. One of our the number one user requested item is movable graph lines. So we will be, we are actually testing that right now. That is going to be coming shortly. And then in general, we're looking at more club sharing options and other user suggested features. We talked about the help and information tab just now with the webinars, the quick start guides, the reference materials, FAQs and feature requests. I also want to point out this slide here. If you were a little baffled by the methodology or how I came about forecasting, check out those Introduction to the SSG webinars. We also, at our national convention, always have a beginner class as well as tons of supplementary and more advanced classes. It's in Washington, D.C. this year. Information is on our website. You can find a mentor from your local chapter or club. The Better Investing magazine, which is a member benefit. All of these starred items are member benefits. It's also another place to learn more about our methodology. The webinars that we've pre-recorded are great places to learn about these other features of the tool set. And quarterly data, which is going to end up being a little bit different class. We go in, and goes in depth into this, into a hour-long paid class that we have. For user feature requests at feedback.betterinvesting.org, you'll see other things that people have suggested that you can vote on, or you can enter your own. The FAQ site, you can search for what your question is, or you can simply troll around the online stock tools category and see if there's something there that would help you out. And if you're looking for more webinars, take a look at what we have on offer, that preferred procedure class that's coming up. This class does have a fee, so just be forewarned about that. The other free tutorials, the Easy Research is coming up the end of February, and we're doing one on the stock comparison guide in April. So those are always fun times to learn more about the other tools in our tool set. Ongoing questions or comments, please direct them to service@betterinvesting.org. If I've not answered, or Ann hasn't answered, or our stellar backroom staff has not answered your question, we'll get to it in the next day or so. So I want to thank everyone again for coming. Fill out the survey as you exit our webinar, and again, thanks to Ann and our backroom staff for supporting this event. And thank you all, and good night.